Now let's hear from Alex Passmore, CEO of New Murchison Gold, with the ticker code NMG. New Murchison is located in the prolific Murchison region of WA and holds a commanding 677 square kilometre land package over the Abbotts Greenstone Belt. The company's flagship Crown Prince deposit is advancing towards production, which is scheduled to commence in the coming months. Alex is here to walk you through what's next for NMG.
Good morning, and thank you, Jane, for that introduction. New Murchison Gold is an advanced gold explorer, as Jane said, in the Murchison district of Western Australia. So there are several other gold companies in our belt, but the bigger ones that are well known, Westgold and Ramelius. And we sit in a belt called the Abbotts Greenstone Belt, which is just to the north of Meekatharra. So very good infrastructure in a very prospective belt in the Murchison. We've got a resource at our flagship project of 280,000 ounces at 4 grams, so high grade, sits in an open pit position, and we've recently declared an ore reserve from that resource of 140,000 ounces at almost 5 grams. So while we're planning to go into production this year, based on that ore reserve, we're also drilling extensional holes to grow the resource, and also looking at an underground extension to that open pit. We've got a 677 square kilometre tenure package in the Abbotts Greenstone Belt, so plenty of regional targets to follow up on as well. Now, the key activity or milestone for us this year has been finalising an ore purchase agreement with Westgold, which own the Bluebird Mill, 36 kilometres by road to the south of our project. So the Bluebird Mill is a 1.8 million tonne per annum operation, and that has capacity to take our ore. So we have Westgold as a major shareholder and a strategic alliance partner, and we were very happy to be able to strike a commercial arrangement around that ore purchase for a 2-year period. So we're busily getting the Crown Prince project into a production-ready state, and look forward to ore sales later on this year. So just turning to where we are, so this is a regional geology map. You can see the Abbotts Greenstone Belt in the centre, near the top of the map, and our Crown Prince project is located sort of in the middle of the belt on the eastern flank, about halfway up the belt. So the Abernathy shear zone is a major shear zone that runs down towards the Big Bell gold operation owned by Westgold, and our gold deposits are mainly located along that major structure. So there's many prospects along that structure, and we haven't got resources on all of them, but I would highlight Kingswood and Abernathy as key projects that we're looking to put resources out on in the medium term. So Crown Prince, the most advanced project that we have. However, we do have Abbotts, Crescent, and Lydia that sit on mining leases. So as we look to what's next, we're looking at our prospects that sit on granted mining leases just for the rapid to be able to rapidly bring them into production. With a mining lease taking about 2 years to prosecute at the moment through the department. So just a little bit on our ore purchase agreement with Westgold. So the Westgold agreement runs for 2 years and covers our open pit material. We will sell ore in ore parcels, and we'll sell between 30 and 50,000 tonnes per month at around that reserve grade, or around the 4 gram mark. So that will be a significant addition to the Westgold production profile, and we're looking forward to contributing that to the Bluebird Mill circuit. The metallurgy is well understood, and the Crown Prince ore is very well suited to Westgold's operations. So the key commercial terms of that agreement are that we get paid 83% of the gold price, and reimburse trucking costs and other operational costs to Westgold. So there's plenty of margin at those sort of grades for both parties to enjoy strong margins. So just turning to our capital structure, and and our funding. And so we're capped at 148 million today, with 21 million at the end of March. So we're well funded to prepare for production and also to undertake that near mine drilling. The board is experienced, and we've recently added Joe Palmer to our board, who brings an accounting background and a financial background as we go into production and financing. So I'll just take you through a fly through of our key tenements and the Crown Prince asset and layout. So this is an aerial shot of the Abbotts Greenstone Belt and our nearby neighbours. So you can see Westgold outlined in blue and NMG outlined in the gold colour. So we actually are one of the largest tenement holders in this area. So Crown Prince sits on alongside the Mount Clare Road, so very good access. 12 kilometres of unsealed road that joins up to the Great Northern Highway, and that road will be used for hauling ore down to the Bluebird plant. So you can see here our open pit plan, and that's a 140-metre deep pit sitting next to the Garden Gully drainage, and a waste dump here, and then crushing plant and truck load out facility here. So as part of our reserve, we published cost data and our cash flow projections. So you can see here that the operation makes around $226 million pre-tax, using a gold price of $4,300 an ounce Aussie. So our cash flow outlook is underpinned by very low capital and pre-production spend, and then a rapid turn into positive cash flow in about the fourth or fifth month of operation. And so you can see, at a conservative gold price, the operation generates, well in excess of $7 million a month for a period of about 30 months. So the reserve the reserve price assumption was $32.50 an ounce, which was obviously well below spot. So our cut-off grade is relatively high and means that it's a robust project. The costs you can see there, which are competitive given the size of the Bluebird mill, and we're taking advantage of a large capacity there. So turning to the resource and what it looks like in a pit sense, this is a 6-month starter pit, so you can see that we get straight into high-grade material above 3 grams, and key hole in to about 40-metre level. Then at around 12 months, the pit is taking in there's two zones that I'll talk about: southeastern zone and main zone. So after 12 months, we're starting to access both ore bodies and still in some high-grade material. Then at 18 months, we're down at around the 80-metre mark below surface, and then getting towards the end of the pit life at around 24 months, you can see that we're mainly focused on the southeastern zone. Now, the pit is constrained by this drainage to the north of the ore body, and so that presents as a pretty interesting upside case for us if we start to look at an underground, which I'll explain later. As we are mining to 140 metres below surface, we have to consider things like geotechnical stability and also dewatering. That's all well understood. We have 2 pits that we'll be disposing water to as part of our dewatering operations, and then obviously hauling to the Bluebird 1.8 million tonne per annum mill, 36 kilometres by road to the south. So if we look at outside of the pit and areas where we have opportunity for growth, this area of the resource is the main and north zone, and it's a high-grade resource that sits near the creek and too close to the creek to be mined in an open pit sense. So there's around 140,000 ounces in that area and below the pit that we are studying at the moment as an extension to our pit life. So if we look at that in 3D, the resource of showing here is now using a 2.5 gram cut, so only looking at the high-grade material that we'd access from underground. And you can see here we've got a conceptual decline coming off the 100-metre level from the pit, This would be in around the 24-month mark of the operation to access those two high-grade zones. So we've been drilling that high-grade resource recently to bring it into a level of confidence that we can look at it in a feasibility study. So some of that drilling has returned exceptionally high-grade results. So one of the highlights from recent drilling was 20 meters at 277 grams, and then a spectacular visible gold intersection of 1.5 meters at 3,000 grams per tonne. So this hit sits just outside the resource, and drilling further down plunge has also continued that mineralised zone. So we don't have assays for some of the holes yet, but we do have very, very good visual indications. So visible gold below that spectacular hit. So we look forward to getting the assays from those deeper drill holes. So the structure that we see in the pit continues down below into that underground position, and this visible gold intercept going around 17,000 grams per tonne in the highest grade zone is on the hanging wall of that same structure. So when we look at that in cross section, we're around 150 meters below the base of the pit, and we're getting fairly continuous mineralisation and some quite nice broad hits as well. So the resource is currently 280,000 ounces, but we expect that to grow with this drilling. We've probably extended the plunge by about 30% from this last drilling round, and we'll be wrapping that into a new resource in the coming 6 months. So just touching on metallurgy and what the ore body looks like, both at depth and in the pit, very high recoveries, so 98+%, with very rapid leach kinetics. So easily millable material and of interest to mills in the area. So the ore reserve that we've published is very much a base case. So this is just looking at the pit, and then we will be looking at the underground, as we move into production at the pit and understand that resource below the pit. So we've been busily working on getting that pit into production, as well as the growth aspects of the resource. So we now have a reserve and we have grade control drilling that's sufficient for initial mine planning. We've done some cap rock grade control drilling, which we announced recently. So there's some spectacular grades starting from surface. All the geotechnical aspects and hydrogeological aspects of the project are well understood, and our submissions for mining proposals and all the environmental approvals required were submitted in late 2024. So we're expecting approvals to be coming through, any time now. So we were expecting them in late April. So the site layout's designed. We've identified preferred contractors for mining, crushing and hauling, and we're just waiting on those approvals to get going. So looking at the mine layout, we have the west pit, which is the main pit that we're looking at in 3D. Then the east pit, which may be looked at given the high gold price, and then a fairly simple layout of just a ROM and a crusher and low-grade stockpiles sitting here just off to the side of the pit. So our resource to reserve conversion has been good, and we will likely increase this as we look at the underground. So what are we doing at the moment? So we're grade control drilling. We have been for the last couple of months, and we've got cap rock results out recently. We're now drilling in the zone 0 to 50 meters, so that underpins our first year of production. We've drilled dewatering bores, and we're constructing pipelines at the moment. And then we have ordered the key components for our crusher and our sampling station next to the crusher, and that will be installed on site in the coming couple of months. So looking forward, we continue to build the project to a scale that's of relevance. So 140,000 ounces and $226 million from a single open pit in Western Australia near Meekatharra, we think is a very good start. But we also look forward to growing the project in terms of its underground, and also look at satellite operations like Abbotts and Lydia. We're looking forward to production and ore sales in the second half of the year, and likely September is a start date for our ore sales to Westgold. So and then beyond that, we're drilling regionally on the large tenure package, and there's some very good greenfields targets for us to look at. Back to you, Jane.
Wonderful. Thank you, Alex. You and I have been working together for such a long time now. I'm really excited about getting this project into production. So let me just quickly jump into some questions. The agreement with Westgold is such a significant milestone. Can you just elaborate on how this changes the CapEx profile and the timeline expectations?
Yeah, sure. So not having to build a plant, it's obviously a very low capital startup for us. So there's about 5 million in hard capitals. That's pipeline and infrastructure. But the operating cost of the plant, really rewards Westgold for not, for letting us get started with minimal capital. But the plant is a 1.8 million tonne per annum plant. So we get the benefit of a large, low unit cost plant, and we're able to produce more quickly and more ounces per month than you would otherwise for a project of this size. So we're both happy with the agreement. There was a pretty significant detail put out in January on the commercial terms. So anyone that wants to delve into the detail, they can look at the notice of meeting from January.
Thank you, Alex. And just last one, we're running out of time, but there's strong geological continuity across that belt. So how important is that for the regional scale of Garden Gully to the long-term sort of growth plans for New Murchison?
Yeah, so the Abbotts shear zone that we were looking at early on in the presentation is the key structure in that belt. And so we are busily drilling along that structure, and most of our prospects are there. So we understand the styles of mineralisation. From what we've seen at Crown Prince, we've got analogues along that structure, and we look forward to proving up the next deposit.
Wonderful. Well, that's all we've got time for today, Alex. Thank you again for the great presentation. Exciting times ahead.
Thanks, Jan.